Earlier this month, Bank of Nova Scotia announced plans to buy a 14.9% stake in Cleveland-based KeyCorp. The deal is worth about $2.8 billion US and is Bank of Nova Scotia's largest acquisition since it bought Tangerine way back in 2012. The move comes at the same time the bank has focused new capital spending on high-return markets in North America. That strategy is developed under the leadership of Scott Thomson. He became CEO of Scotiabank in early 2023. Yesterday, BNN Bloomberg's John Ehrlichman sat down with Scott Thomson for a wide-ranging interview on the path forward for Scotiabank and the North American economy. Here's the first part of the conversation. It was taped the day after Scotia reported third-quarter results.
This is our third quarter since our Investor Day, and what I was pleased to see is that we did what we said we were going to do. So for the third consecutive quarter, we were able to increase profitability. We're able to see now sequential earnings growth, which was great. Our Canadian business performed well. We grew deposits. We managed the mortgage portfolio to start to see some sequential growth. We had great PTPP growth, and we saw some good earnings growth, so I was pleased with the quarter.
Okay, let's dive a little deeper into the Canada story. Last time we spoke, you talked about the opportunities for growth in everything from small business to wealth management, and geographically, whether it's BC or Quebec. Was there anything that stood out to you in terms of the performance in Canada during the quarter?
Yeah, we talked a lot about redeployment of capital into our Canadian business, aligned with that North American corridor focus. And the Canadian business is performing well. So we saw, as I said, mortgages, multi-product mortgages improvement. We saw cards improvement. We saw small business improvement. And we saw the commercial business do well also. What I was particularly pleased about is the enterprise-wide collaboration between our wealth business and our Canadian franchise. And to see the amount of referrals between wealth and the retail network was really impressive this quarter.
And what do you think are some of the key drivers of that? For example, last time we spoke, you talked about the opportunity through digital to grow. Was that one of the key mechanisms?
Digital is definitely important, and you need to have an omni-channel experience for your clients. But in this case, it was more some of the fundamentals around making the organization work together for our clients. And so having Jackie and Eris, who are our leaders of our wealth and our Canadian business, respectively, really pull the teams together and encourage what's best for the client in terms of both a wealth and a branch opportunity. That's been the differentiator for us for the last 9 months.
Okay, let's compare the Canadian story to what was happening during the quarter in your international markets.
We've been deploying capital into Canada to see that growth. In the international business, what I've been really pleased about is they're doing more with less. And so you actually saw capital come out of the international business, yet earnings improve. And it's a huge testament to our international teams to be able to do that. And they've done it through a focus on primary clients and a real focus on productivity. And so when you think about the amount of costs that have come out of that business over the last year under Francisco's leadership, it's been very impressive.
You've mentioned capital a couple of times. Obviously, one of the big capital announcements since we last spoke was a strategic investment in KeyCorp. This is a regional bank based in Cleveland in the United States. How did that deal come together?
Yeah, well, we've talked a lot as part of the strategy about building out the North American corridor, and we've got a very strong GBM, corporate and wholesale banking business in the U.S. We're the 10th largest foreign bank, and we're going to continue to grow that. And you saw that actually this quarter. We saw 30% fee growth year over year in our GBM business. So that organic growth is going to continue to be a priority for us. However, as we've gotten to the peak of this capital build cycle, we have the opportunity now to redeploy capital. And so we thought about how best to redeploy that capital, obviously into Canada, obviously into wealth, but there was also an opportunity here relative to a share repurchase to do something that was really good for our shareholders in the near term because of the accretion that comes with it, earnings accretion, the ROE, the return on equity accretion, which is a big driver of TSR, and it gets us a toe in the water in a very uncertain environment right now in the US. And so it was a low cost, low risk way to get US exposure, redeployment of capital from developing markets to developed markets, and that will provide optionality for us in the long term.
And when you first announced that KeyCorp deal, some investors were curious about how that investment might compare to, say, returning money to shareholders through stock buybacks. You've thought about both of those strategies. Did you ultimately consider a stock buyback?
Definitely, when you're in this position, we think about all the redeployment options, and we did look at the buyback. And given the capital efficient nature of this deployment, it's 60% more attractive than a buyback. And so for our shareholders, you get that near-term accretion in earnings, which is really important, but long-term you also have the optionality, which you wouldn't have gotten a buyback. So both things work better for the deployment of capital with Key.
And what do you want to learn about the U.S. market through this investment?
Yeah, well, we have 2 seats on the board, so that is, fantastic. As I've spent more and more time in the U.S. over the last 18 months, it's a very different environment, and I think, we're seeing that with the, different regulatory environment, different political environment, and so we want to make sure that we have the benefit of learning through Key, and so these board seats will help. And I think long-term, there's an opportunity as well to think about doing some things together. And that wasn't the primary motive for doing the deal, but as we think longer term, there may be opportunities to collaborate, which will also increase our learnings and ability to operate there in scale going forward.